What is it about the dynamic with that class of customer that makes them so hard to predict?
Yeah, I mean, first, just to recapture, the demand for our business in the fourth quarter was kind of across the board. We had strong growth in the cloud. We also had strong growth with our comm sector or the network as they prepare for 5G, and strong growth of our IoT business or businesses at the edge. So we've been on this journey for driving demand with multiple compute vehicles across the platform. We saw strong growth from all of them. Cloud was the largest grower, growing almost 50%. And what we've experienced with the cloud service providers around the globe is they come in big spurts. They buy a lot, they ingest it, they consume it, they suspend their buying, and then they come back in big waves. So Q3 was strong with the cloud players, Q4 was very strong, and we expect Q1 to be strong as well.
So what are the broader indicators that you look at then? If from the customers themselves it's hard to tell, are there broader indicators that you look at to be able to tell whether they're going into investment mode and buying from you more, or whether they're going into digestion mode?
Yeah, I mean, I think the first one and the most important one is what we characterize, John, as this insatiable appetite for data and the amount of data that's being created and consumed, both in consumers and in enterprises. And that is the ultimate demand signal that we're trying to determine. And what it suggests is the outlook for the medium and the long term is going to be very strong. Everybody wants more and more data, and the implications of that data is they need more compute, they need more storage, and they need to move data faster. That's what places demands on the cloud players. And then from that, real strong long-term trends, we try to look at historical patterns with each one of our customers about when they're buying and when they're ingesting, and aggregate that all up to give a view as to how we see demand signals. It's a bigger and bigger part of our business, and the demand signals are somewhat lumpy. So as we talk about going forward in our outlook for another record year in 2020, we got very clear short-term signals and not as clear as we go through the rest of the year.
And that's what I wanted to follow up with. In the second half, you projected softness in that area specifically, among others. What is it? Is it just plain caution, or is there something in particular that you're expecting in the mega-scale cloud space that's going to slow down in the second half?
Well, I just go back to we're expecting medium and long-term very attractive trends in a universe that needs more and more data. How they then buy equipment comes in spurts, and we're trying to read those tea leaves when we look forward. And in the aggregate, we're looking for strong growth, but it'll be stronger in the first half. And our expectations at this stage is it may be a little softer in the second half, and we want to be cautious as we look at these demand patterns throughout the course of the year.
Speaking of reading tea leaves, Bob, I'll ask you to read some larger ones. I mean, there are some who are looking at your quarter and saying it's the first sign of a long-awaited rebound in broad CapEx. Any signs that you could go along with that?
Well, I think we've seen for a while, and this is particularly with the large cloud service providers, is their growth rates have been very strong for a while. And again, the demand for compute continues to grow. And the implications for that is the industry needs to build out more and more capacity to deal with that growing demand. So we've been seeing it for a while, and our expectations, at least in the first half of the year, is those the capital spending will increase for our large cloud service providers.
To follow up on Carl's question, are there things more broadly, policy, whether it has to do with trade, whether it has to do with changes in tax law, that you think are spurring your customers to buy more now than they would have otherwise?
We saw policy-oriented waves impacting our business in the last couple of years. But at this stage, we see more fundamentals, just more fundamentals of the demand for compute. And that's what's really driving the overall demand requirements for the products that we serve, whether it's in the cloud, whether it's at the network, and whether it's at the edge. And keep in mind that the way we see the world today, John, is everything looks like a computer. Our historical business was selling compute into PCs and into servers, but that's not the universe that we see now. We see our homes look like computers. Our automobiles look like computers. Factories look like computers. Retail stores look like computers. So more and more compute is happening, and it's moving not just strong growth in the cloud, but it's moving into the network, and it's moving out to the edge, and all these billions of devices that need to process data and be connected to each other. That's where we see the ultimate demand growing over the medium and long term.
Now, Bob, Intel's famous as a manufacturer, your process technology leadership historically, but as you've admitted, you guys have tripped up recently, fallen behind where you have expected to be, and yet your stock is approaching all-time highs. So what kind of details can you give investors about exactly what Intel is doing to get back on track? I know you're ramping up 10 nanometer now, have plans to be delivering 7 nanometer end of next year. At the same time, though, TSMC is talking about delivering on 5 this year. So how quickly can you get back on track with your process technology?
Well, we've talked about this quite a bit. We learned a lot from the migration from our 14 nanometer to our 10 nanometer. It took longer than we had hoped and we expected. There was lots of learnings for us there. And from those learnings, what we said is that we believe we can get back to a Moore's Law cadence of introducing a new node every 2 to 2.5 years. What that means now is we're ramping 10 nanometer, and we expect to launch several products during the course of this year as we scale that out across all of our product portfolio. And then we also indicated that 7 nanometer, we expect to launch it at the end of 2021, while we're also investing in 5 nanometers. So our focus is on recapturing process technology leadership as we expand the role we play in the products we build to serve this increasing and growing TAM. So real good improvement during the second half of 2019, and our expectations is that'll continue in 2020.
Bob, as you mentioned, the different universes of computing, cars, retail stores, homes. I mean, my first thought was to Mobileye, and my first question was whether or not you see yourself adding more bolt-on acquisitions as those universes expand.
Yeah, I mean, I think, Carl, the way we view these 3 key inflections for compute that we think will have a dramatic impact over decades to come, and they center around 5G, AI, and the intelligent edge. And autonomous vehicles is I think, the biggest opportunity that we see. So we are continuing to invest both organically and most recently acquisitively in the space of AI with an acquisition we made in the fourth quarter of Habana, which extends our portfolio of AI-oriented products. And with Mobileye, we continue to expand the role it plays, not just in AI and compute vision in the automobile, but playing a broader and broader role for the auto OEMs as they deal with the increasing requirements placed by their customers on building compute into the vehicle. So we're 2 years into this Mobileye acquisition. It's been a wonderful combination of an innovative, disruptive company coupled with Intel's technologies, where we think autonomous vehicles will be a significant opportunity for our company going forward.
Bob, talk to us a bit about the 5G ramp. I know we've talked in the past about how there's an opportunity for Intel at the service provider level as their equipment gets smarter to lay the groundwork for 5G. Is that ramp happening as you expected, first within the U.S.? And how much upside do you see potentially this year in service provider based on that 5G rollout?
Yeah, I mean, first, at the networks itself, over the last couple of years, we've been working with the telcos, really upgrading their infrastructure by bringing more and more compute or Xeons to the network infrastructure with software-defined architectures. That enables them to rapidly roll out 5G capabilities, and we really see that starting really to a little bit in the fourth quarter. You saw our comms segment growing at 14%, but that will be a much bigger source of growth as we go into 2020. So it's ramping up. We're expanding the role we play in the network to take advantage of these pipes that will enable more compute at the edge and faster, better latencies as we go forward. Big opportunity for us, and we've been investing quite a bit in it the last couple of years.
Hearing some rumblings out of Europe that if Huawei's participation in 5G networks over there is curtailed, it could slow the rollout of 5G. Is a restriction on Huawei a potential headwind for Intel in that arena?
No, I don't think so, John. I think, we're at the early stages of deployment. We got a real strong backlog with 3 of the TEMs that participate in deploying 5G around the world. So we see real big opportunities, and there'll be ebbs and flows, but 5G is going to happen. It's here now, and the opportunities for us have been fairly significant.
Labor market-wise, in your search for talent, either retaining it or finding it, where are you? Are you going to continue to hire at a certain pace? Are you slowing that down? What do you see happening in 2020?
I think it's going to be fairly similar to 2019, and that is the war on talent will continue to be intense. We think Intel is a great place to work. We got over 100,000 of the smartest people on the planet building really exciting products, having a big impact on the world. And we'll compete for talent as we go through the course of the year. And we'll be making smaller investments in some areas and much bigger investments in others as we see the opportunities unfold in front of us.